Hey everyone, D here back with another video on how to find bullish and bearish divergence and convergence. So this can actually tell you when the price is going to reverse at the top or at the bottom. So usually when you see these things, what you want to do is, well, if you want to buy a stock, you want to buy it at the bottom, and pretty much this will tell you exactly what you're looking for so that you get a safe entry. So what I'll be covering here is what to look for. And what we're going to look for is the MACD, RSI, and price action all confirming that a reversal is coming. So let's get right into it. So for this example, what I have to the left is SNDL, and to the right I have Kodak. So as you know, these things bottom out around a good amount. Like, so this one over here bottomed out at 6.4. And this one over here bottom out around 6.80, 68 cents. So how could you have found that, right? How could you have bought down here and take advantage of this move up? So first thing is I'm going to teach you bullish divergence. So how you can find that is that if you have the MACD and the RSI, you want to look at these because the RSI measures the strength of the stock. The MACD measures the momentum. So in this case, how did you know, or how could you have, known that this was the bottom here? Well, what you'd want to look for is, well, first off, how the price is doing. So as you know, during this big sell-off, you had this one bottom right here, and would you have bought in here? Well, the thing is, you would not have bought here. Why? Is because it didn't make any form of divergence. The only thing that was telling you that it was going to go up, all right, was actually just on the MACD. You can see that the selling momentum is going away, so therefore the buying will be coming very shortly. So it went up but sold off right here. Okay, so now what do we get here? When it came back down here, all right, let's look at it like this. Okay, so say it came down here. What you have now is that, well, say for example you want to get in, but you don't know if you should or not. Because why? Well, over here is support, so getting in here would be fine, but why else, right? So if you got this one low right here, okay, so as you can see, candle, it closed above here. You have the RSI at 32, all right, but then it made another low. But what happened, right? So after this low, this big bearish engulfing candle right here, then it made this formation. All right, but what do you see now? The price is at 7 cents, but it's sold off even lower. But now, all of a sudden, the strength of the stock, so in the RSI, the strength of the stock is at 32.9. So it's a lot stronger than before. So that's where you have the divergence happen. Pretty much, the MACD and the RSI is not adding up to what the price should be. So in this case, for this sell-off right here, like, how did you know not to buy here? Well, first off, the strength was actually getting weaker and weaker as it was downtrending. So as you can see right here, would you have, say for example, oh, you want to buy the dip? Well, why would you buy the dip? Because the strength is saying it's getting weaker and weaker. You want to wait. You want to wait like, oh no, it's going back up. This is a reversal, right? But no, it's still lower. But then you would be like, oh, hey, the MACD, I mean, it should reverse soon because the selling momentum is dying off. Well, the selling momentum is still there. But what you want to do is wait for the perfect time till you see something like this, right? So yeah, you can see this, like, oh, it tried to go up, but then it came back down, right? Some people would be like, oh, like, you were wrong, like this and that, right? You can, it's going to go back up. It's going to go back up to like, $3 or something like that. Well, the thing is, it never said so on the RSI. So what you want to do is, if you want to be safe, just wait. You wait, and then see what happens. It goes up. Yeah, the selling, is officially over, but then, RSI is getting back up there, but this was not, there's no confirmation. So getting here would be kind of risky. So you just wait. So when in doubt, you want to stay out until you get confirmation on both indicators and the price action itself. So we were about right here. Okay, so now it came back down even lower. All right, but this time higher levels of strength. So this is telling you that it can reverse to the upside. Also, you got this selling right here, but then now this selling over here, this downtrend, right? You had this many sellers, right? This much momentum to the downside, but now you come back down here. That's barely anything. Comes back down one more time. That's still nothing. Look, you can zoom in and you can just tell that, like, well, selling is actually getting weaker, But then you see this one right here. This is telling you that, hey, this could continue downwards. But the MACD is saying that it's getting stronger. So what you want to do is wait. Now you waited for this. Okay, so this right here is a doji. So that usually negates the effects of a sell-off. As you can see, as it sells off right here, we didn't see a single doji, and then it just continues its thing. And then as soon as you see this over here just negates the down pressure or the up, up pressure. So if you see this on the way down, that's a good sign. But if you see this on the way up, then that's a sign where it's going to come back down. That's when you could sell, but that's really up to you if you want to sell or not. So you wait. So you see that there is bullish divergence here. All right, over here, momentum was kind of non-existent, but you see the lower low with higher levels of strength. That is one way to see bullish divergence. And then what happened? It goes back up. Okay, so over here you could buy this because usually this, when it comes back down to a doji, this is a confirmation. This confirms that it's going to go up. So then what do? You just wait, and then it comes back down. So people that didn't get up here or here, they would buy down here. All right, but then you see now that there's a lot of selling momentum, and then the strength is, the stock is a lot higher in strength. So if it did come back down to the same level, this would again be higher strength than the previous two lows. So then just keeps going, and then eventually it just goes. Okay, so now usually you would not want to buy here because it's too risky. You'd want to buy at the bottom. So another example I have here is Kodak. Okay, so as you can see right here, sell off, sell off, sell off, but then you have this low and this low. So this would be a double bottom. So double bottoms, you can also find divergence as well. Okay, so for example, we didn't see this, we saw this. Okay, so you got the first low with this much selling momentum and this much strength, kind of weak. All right, but what you have here, this would be the second one. All right, the second low right here, it tended to come back down a bit lower, but then selling momentum, non-existent, higher levels of strength, which indicates a reversal on the way up. All right, sorry, on the way to the upside. But this is a reversal on the, when you buy down here, it would go up here. So this is an example of how you can find it at the dip or at the bottom. And so these are the daily charts, so they're a lot stronger. But you can also find it, for example, you can also find it on the minute chart as well. So as long as you have these two indicators up, for example, on the Discord, actually, this person, was like talking about AMC, and then I told him that, hey, this is actually where day traders would exit, okay, and it was right over here. All right, so why would I say that? Well, first off, you can see that, first off, I'll tell you how you can actually find this movement up. So a lot of day traders just bought down here, and then they rode it all the way up, and then sold off here. But then what pretty much showed you that this would happen? So first off, using the MACD and the RSI, you can tell that if it's going to continue higher or if it's going to reverse. Okay, so right now, let me show you an example of continuation, and then you'll see bearish divergence. I'm sure you can already see it already, but I'll just walk you through it. Okay, so the first thing is you got this one move up and then consolidation. So what you have is that the strength is high like this, 1, 2. All right, so this over here would tell you that it's going to sell off soon, which it did. It sold off just a little bit. Again, this is the minute chart, so the sell-off isn't so extreme. Okay, it's only extreme once you hit a certain point where it's bound to happen. Because, well, first off, look at the daily chart, right? You want to look at if you're using just the minute chart, that's not going to be good for long-term trades. You want to use the daily chart as your overall trend to confirm. And then if you want to scalp or day trade, then look at the minute chart. But as you can see on the daily chart, I mean, it hit this high right here at around 68 or so. I mean, it's spent. It's kind of spent right here. So, an average trader that didn't want to that knows what he's doing. This over here was just like Wall Street bets movement. People trying to screw over the hedge funds, which is great because I hate hedge funds. Right? They do screw over the market quite a bit. But this over here, it can be short-lived because it went up so high without taking a break. There's going to be some people that are taking profits, and hedge funds might go back and short it and to make money because they lost so much money. All right, but let me just go through the minute chart right here. Okay, so you got 1, 2. All right, so one move right there. All right, and then you got this much strength, which is good, and then it comes back down, consolidates. Okay, then you get another move up. Okay, so you got one more move up, and then it comes back down. But what do you see? You see that, okay, this is the first move. You got this much strength and this much momentum. Okay, next move, you got even more strength. All right, more strength and even more momentum. So this signaled another move to the upside. So this is consolidation, and then pop, another move up. Okay, well, what do you see here? So first off, you already see some divergence. Okay, so you see that this move up made it so that, well, you had this much strength, and then you have this much momentum, but the next move up to 62 had lower levels of momentum and lower levels of strength. So this is almost the same, right? So you could say this is convergence. So convergence is just a warning signal where the price could reverse sometime soon. So you could either take your profits out now and don't have to stress, or you just wait. You just wait to see what happens. Okay, so that's one, that's two. Okay, next, what happened? Okay, so let me go back, and then, oh, you got one of these, and then, okay, this is the other move up. Okay, so this is where I said, okay, this is where people would start taking profits. Well, why would they take profits here? First off, you saw the daily chart and how crazy it was. Second off, this would be near the tip of the, let me just show you. This would be near the tip of this part right here. Okay, could it move up again? You know what, it could, because it's a movement. So technical analysis is kind of thrown out the window there, but they still apply for people that have tons of experience in trading, and that they just want to day trade, get in, get out, a quick quick 30%, and then they're out, right? So people will take profits, and usually those people have a lot more money than the average person who wants to just hold this and ride it to the moon, right? So a pullback would be imminent. Could it go up? It could, but as a trader, I would not get in right now. I would have gotten at the bottom, but not up here. But let's look back at the minute chart to see what happened. Okay, so first off, you got this, okay? So first off, you got the high, all right? You got another high, so this is where people could take profits, okay? But it was also telling you that it could come back up one more time, because why? This would be almost the same level, okay? But then it goes up one more time right here, okay? Now, it went up even higher, but you have the same level of momentum, which is not that good, because usually you want higher levels of momentum. So you see how this run up, you got this much momentum, this much strength, but the next one up, you had just the same amount of strength, but lower levels of momentum. So there is a divergence there. There is something that's saying the price does not match the price action, okay? So as you can see, it goes up one more time. All right, well, this over here just got shot down, but then it just came back up one more time. All right, now you're up here. All right, now, you want to sell, or do you want to keep holding it? Well, you could keep holding it if you really want to, right? But then you just want to see what happens. Okay, you go like, okay, well, this is convergence. This is warning me that it's going to reverse. But you got 1, 2, and 3 warnings. Usually usually in the stock market and charts, 3 times, third time's the charm. All right, it's always 3 hits, you're good. It's always in threes. There's 3 drives. That's a pattern as well. So you get 1 move up, 2 move up, 3rd move up. The 3rd move usually reverses all the way back down to the first move area. So if this was 3 drives, 1, 2, and 3, then it would reverse up to 40, at least 54. So you got 1, 2, 3, warning you that, hey, it's going to reverse. So you wait, and then, okay, well, this over here, this would have told you, because what happened was it tried to slam down. But then you got this doji right here, rejection off the lower price. And then as it was going up, it just kept getting rejected. You see those wicks? Those wicks are telling you that the candle didn't want to go up. It just wanted to come back down. And on top of that, if this tried to make another high here, well, you can clearly see that it was a lot lower in strength. So this over here was divergence, bearish divergence, therefore reversal. And then what happened? All right, it came back up one more time. All right, now this over here, now it's up here, went even higher, right? And then it's at the same level, but now you're even lower in strength. No more selling, no more buying momentum. Now it's on the selling side. So what happens? Boom. All right, you got a flat top right here, high, the same high, lower levels of strength, bearish divergence, get out, and then boom, boom, and boom. Okay, so it did fall to the this is why it bounced up, because, well, first off, it's probably the 3 drives, 1, 2, and 3. The 3rd drive always comes back down to the first pump. Okay, well, up to the consolidation level right here. So then, what do you want to see here? Okay, so you see a low and a lower low. Is this bullish divergence? No, because, well, first off, the MACD is saying, yeah, it could reverse here, which usually when it hits a target, it just gets bought up. But what you see here is that the RSI is saying that it's much weaker down here, so chances are it could continue. All right, so as for this, maybe the run is over for today. Maybe wait, but this doesn't look good. No decent trader would get into these prices up here. Smarter traders would probably want to get down here instead. Okay, because as you can see, what we have here, right? It also applies if you want to see continuation. When the price was around $9, right? Goes back up to 12, comes back down. Second move is to 13, comes back down. Okay, you got this much momentum, and it's a lot stronger. Next move up, you have higher levels of strength, higher levels of momentum. This is where traders would get in. All right, you get in, you ride it all the way to the top, and then RSI is around 95. All right, 95 would be right here. Okay, you would have gotten out somewhere in this big green candle right here, because RSI is just saying 70 is overbought. But then when you see 95 like that, I usually see 95s all the time, and you just want to get out, right? Because it happens. Right? So that's an indication of bearish divergence that you can use on the minute chart or on the daily chart, whatever you'd like. But also another example is Bitcoin. Okay, so let me just show you something here. Let me just go to the daily chart. So I did say to a lot of people that, hey, this was the top. Why is that? Well, first off, you get one spike. All right, you got this much, right? You can, just a quick review here, right? This high and this much strength, this much momentum. Okay, good. Could it go higher? Well, let's see. This high was all the way here. Could go up. Okay, now it's kind of shaky. All right, so a decent trader would probably get out here. All right, but it goes back up. Would you get back in? No, because once it goes back up here, then you get a downtrend and you get this much. Okay, so you got this much momentum in here for this other pump. All right, this much strength. Now you're going on even higher, lower levels of strength, lower levels of momentum. One more high, even higher than before, but this time, oh, buddy, you are so weak right now. Look at that. 1, 2, and 3. Price was going up. Momentum was going down. Same thing was the strength, and then sell off, big sell off. Okay, so this over here is how you would tell. Now, as for this, what do you see down here, guys? All right, what do you see down here? You got a low, lower low, lower levels of strength, higher levels of higher levels of strength, lower levels of negative momentum. This indicates that it could definitely reverse. To how high? Could it go all the way back up? No, probably not. Maybe up to around the 50,000 area, and then we'll see what it does there. But this is how you can tell that, hey, you can do the whole, hold it all the way here, all right, and then you sell around here. Once you sold, then you can just wait for the bottom. Waiting for a bottom is not like, oh, buy the dip, buy the dip, buy the dip. No, because over here is telling you that it's getting weaker. Selling pressure is there, so you would not buy here. Like, oh, it went over here. I could have bought it here. Now it's going to go back up. No, you just wait. You wait until you see, okay, low, lower low, higher lows of strength just slightly. All right, this was the amount of selling. Now it's down here. Selling is a lot less, but there's still a lot of selling pressure. You wait. Okay, you got this bottom right here. Now this time, it's a lot stronger, and there's barely any selling. All right, and then boom, that's where you get in, and then that's a good. What was that? That's like $4,000 up, which is good. So this is how you can find bearish divergence, bullish divergence. You can tell when to sell, when to buy, using the MACD and the RSI and the current price where it's at. So, that being said, that was pretty much the lesson. Just keep this in your mind. You want to use more indicators. You don't want to just use one. All right. I'm using 1, 2, and 3 to confirm it. So one other thing, last thing for you. Okay. So IND. Now, a lot of people are talking about the stock, but what you can see is that, well, first off, what happened? Okay. Sold off all the way down here. Now it's starting to hold this level. Okay. Why is it holding this level? Well, let's see. You zoom in closely. You got a low right here. You got the same low, but this time, higher levels of strength. Okay, and selling pressure is actually disappearing. And then you got the same low, but this time it's actually going away. And it's holding this level right here. Okay, it's holding it. Could it come back down to 1.4? It could. I mean, it tried to. But then if it did, and it closed like this, then it's even higher. So you got 1, 2, and 3. It's actually pointing up. This over here, not a lot of people are selling anymore. It's looking like people are starting to buy more. So we could see this go up from here. But, buying here, you're usually not the most confident when you buy here. Every time you buy down here, this is the safest thing to do, because as soon as it breaks just slightly, then you can get out instead of you buying right here and it just breaks and you're just losing like more than half your money. So buying down here is the safest. All right, because if it ticks any lower, say it goes to, well, in this case, you break 1.4. Next support is at around 1 cent. Okay, so buying here, it's kind of scary, but buying down here is the safest thing you can do. But then usually when it goes back up to the upside, you go like, oh, I should have bought more. Okay, so just use these tools as an example of how you can find reversals. I mean, another example would be, let's see, let's go to HCMC. Okay, a lot of people like this stock too. Okay, so example right here. All right, why do we buy it down here at the bottom? Well, first off, you got this one, and you got this second one right here. Okay, but you can see the RSI was even lower. It's saying it's getting weaker, but you can see how much selling there was after this big drop. Goes back up, comes all the way back down, and then this is an example of like just staring at the MACD, at the momentum, just slowly getting chipped away, and then as soon as you see this, right, you zoom in all the way, you can see it just going like less and less, and then this happens. So this is where you could buy it. Okay, and then would you expect to move up? Well, you could. So one move up happened. Okay, it moved up, and then it came back down to retest this level. Okay, well, people that missed it, you know, down here, they would have gotten down here at 14. Why is that? Well, you got the one move up, comes back down, but you got this much strength, so this signals that a second move was coming. Now, this over here was slightly different because this was a pump and dump. It was coordinated by a lot of people on, this was the May 3rd, right? So this kind of screwed up the TA, but as you see, it just came back down, and then as it comes back down, this is where the demand zone would be, and then pop. All right, so this is good. You want to close at 14. So I have these two here because, well, these are major dates because, well, this was supposed to be when the rights offering was going to end and expire. So that's the rights offering would be the whole, you know, people like buy shares at a discount. If you hold 1 million shares, you can buy, you know, 250,000 shares if you are holding 1 million shares. So this was extended up to this date. So we should see more action coming in soon. But right now, what you can see, low, lower, low, there's no bullish divergence here. This over here was just, now it's actually starting to get based on hype. There are over 400,000 shareholders here, so we could see this moving quite shortly. And also the whole AMC, they're actually starting to jump onto this HCMC because it's become a meme stock, right? So you could see some crazy stuff happening. All right, so this is pretty much it for this lesson. Hopefully it was informative. Now, you know, feel free to just watch this lesson over and over again. You will find these indicators on stocks. Okay, so any stock, you know, website you're using, I believe like on Webull on the mobile app or on like TradingView, investing.com, you will find the MACD and RSI, and then you just want to look for the price action. All right, so that was it for today. I will be uploading this and pretty much just sharing my knowledge with you all. All right. So that was D from Positive Equity Trades. Hope you have a good night.